morning, everybody. Welcome you all back again for the day 5 sessions and also the valedictory function. Today we are moving into the last day of our ATAL sponsored FDP on technology disruptions in management. And today we have as the 13th session, which is allocated for Fintech in payments. I just want to spend 1 minute before our resource person joins us. He'll be joining us in 2 minutes. So I just want to tell you about why I have chosen this particular session for this FDP. What made us choose this particular topic, that is Fintech. We have been discussing so much on Fintech, but then we thought there should be some specific session on Fintech in payments. So a very brief prelude to session 13 on Fintech in payments. Actually, the payment industry in India is booming like anything. And out of the various Indian fintechs that are successful in India, the top 7 Indian fintechs are operating in the digital payments. And the fintech, we all know, comprises of various areas like insurance technology, insurtech, real estate technology, real estate tech, regulatory technology, regtech, supervisory technology, subtech, then robo advisory services, and then modern ways of raising funds through P2P lending, crowdsourcing. So the list goes on. We have cryptocurrency, blockchain technologies that are used here. So in the whole landscape of fintech, the payments as such has a major share of the fintech industry. So that's the reason we wanted to spend an exclusive session on payments. And moreover, India has surpassed USA and China as the world's largest real-time digital payments market. So that is another reason why we wanted to have an exclusive session on fintech in payments as such. And it is also predicted that by 2025, the digital payments in India will be more than 70%, and all other methods of payment will be just less than 30%. And if you take the last year, 2020, the number of transactions, the real-time payment transactions were more than 70 billion. And this is a surge of 41% when compared to the previous year, 2019. So that's the kind of growth that we are experiencing in the payment industry. And also to add on, we have several payment fintechs that are very successful, and one such successful fintech operating in the payments sector is the Paytm, which is coming up with the IPO probably by September or October. They have filed the red herring prospectus with SEBI. And the IPO is expected to be worth of rupees 16,600 crore. So with this as a prelude, now we can take this session forward, and I invite Suganti to introduce our resource person for this session. I will stop sharing. Yes.
Good morning. Thank you, ma'am. I'm happy to introduce our chief guest for the day. Mr. Krish Srikanth is a freelance financial consultant, a strong subject matter expert in the real-time payments and fintech. Krish has over 23 years of experience in product management, program management, architecture, design, and full SDLC within the payment and fintech industry. Krish was a key person in critical national payment system between 2016 and 2019 in the UK, FPS, BACS, CHAPS. In US, it is RTP. In Thailand, it is NITMAX. And in Peru, it is CCE. Currently consulting for Saudi Payments and Saudi Arabian Monetary Agency, it is SAMA, on a $250 million real-time payment program in realizing Vision 2030 for a cashless economy in Saudi Arabia. On behalf of College of Management SRMIST, we are happy to welcome you, sir.
Good morning, everyone. Thank you very much, Kavita and Dr. Sukandi. It's a pleasure for me to join you today. Thank you.
Thank you, Krish. We are seeing after a long time. We
Sure.
had one session couple of months back.
I think I will be able to share, right?
Yes, yes, you have the sharing option.
Just let me know when you get to see the screen.
Yeah, we are able to see.
Right. Okay. So again, good morning, everyone. So today, this topic is a bit overloaded in my view, but I will try to keep it as focused as possible. So Fintechs is payments. It's itself it's a very wide range topic. Fintechs covers so many things. So the team has picked up just the payments area for this particular session for me, and how it disrupts the financial sector today. So it has been there for at least in mainstream for about 6-7 years, fintechs in payments. And since its inception, it has always been disrupting, and it's a constant thing that is happening. Now, let us first understand what are the things that are in fintechs. And apart from payments, we all know by now, we should all be familiar with so many things that is happening in the financial technology. It starts from, digital KYC to the regulations around it and the regulation technology, or RegTech they call it. Then you have the distributed ledger related technology, which is called what we call blockchain in common terms. And then we have the biometric based technology that is influencing the financial sector. Then you have the cloud-based systems. You get everything everywhere, anytime, at no parity. So that is the cloud-based influence. Then you have crowdfunding, alternate credit scoring, cross-border payments, maybe make use of the digital currencies or cryptocurrencies. All this happens. On top of it, you have the payments. What is payments? Payments, first of all, is about a mechanism by which you exchange risk. Nobody understands where payments and risk comes from, because every time you buy something, you have to pay for it. You're also exchanging the risk of the value to the goods and services that we procure. So, right from the beginning of the evolution of any trade, payments have always been there, whether the currency has been there or not, but the payments have always been there. It has been a payment, and it has at the initial stages, it was barter-based payments, and then it evolved based on certain things. So the certainty comes from the payments that's happening, and that's the way it is. So payments is very core for anything to buy and sell. So again, we all know this, but we haven't probably put our thoughts together as to what these are. How today's fintech in payments is disrupting the financial sector. That is the one which we have to see. So we will now go into what fintechs means and what disruption means and how this hangs together. So fintechs in payments, like in any other disruptive area or any other conceptual area, is a combination of things that is happening, right? So it's the technology and the innovations in the sector that happens in the payments landscape. Now, what is this technology? What is this innovation? Is that every time a new technology comes, there is a set of people around the world. They try to put together to make use in our real day-to-day life. So what is happening in the financial sector today is making use of biometrics, making use of the cloud platform, making use of so many other technical advancements that is happening to make payments, right? So that is the fintech in payments. Now it sounds so simple, but it It took a while, and it took a lot of financial engineering to take place, to put it all together, to make some sense out of it in payments. That comes with the real-time payments. It has always evolved, but the pace at which it evolved in the last 2-3 years is so high that we are talking about digital currencies here. We are talking about instant payments here. We are talking about how the governments are trying to make digital currencies similar to what it looks like in the cryptocurrencies. Government is coming at its own digital currencies. So all these technical things that are advancing are shaping things up, and what happens within the financial sector is basically the fintech. And when you see very specifically to the payments, you call it as fintech in payments, and it competes with the normal ways of payments. Like the normal ways of payments include checks. Perhaps many people have now forgotten what the check looked like. Maybe my son or my daughter wouldn't know what a check looked like, right? So in many countries, it has been phased out. In the UK, at least where I live, it has been twice attempted to phase out, and then they sort of rebrought it to life by having electronic checks, right? So those sort of things are happening. But when you actually pay through a wallet or through anything which is not traditionally a fiat currency, then that is that's an advancement. So so it competes with the regular cash. Cash is the king in many countries, but cash has been in some of the Nordic countries, they have eradicated. That's the way we say the whole of the cash. So it competes with the traditional payment methods, vehicles, and tenders. So the sort of, I don't know, the demand drafts and things like that are not a thing anymore, because there was a time, if you remember, when we used to pay our university fees, I used to pay using demand draft, and to get a demand draft, you need to queue up in the branch, get the payment tendered, you get the demand draft drawn in somebody's name, or some organization's name, and it takes 3 days to clear. The same happens with the check, but the check may bounce, but the demand draft will not, because it's an assured tender. So many things has to happen. In order to have an assured payment, secure payment, you needed to have certain vehicles, certain instruments in the past. Now things are changing, and we are seeing that it's more fast. And it's extremely cheap, because there is no paper involved, there is no pushing of the workflow involved. It just happens instantaneously. So these are the things that are, sort of things that make up the financial technology in payments. Any questions so far?
Oh, it's fine.
Fine, thank you. So, so this is what the fintech is all about. So let's move on to disruption in payments. So by definition, disruption is anything that amends or disturbs or challenges the business as usual, right? So what is business as usual? If it is good, it is fine, but is it maturing enough to make things better for the ultimate customer experience? If it is yes, then it is seen as a constructive disruption in the industry, right? So although we hear disruptions as a negative statement, as long as it is constructive and it is changing the industry into a right direction, into a more modern and more user-friendly to fit for the purpose for the today's world, then we call it a sensible disruption. And that's what we are wanting always, right? So what the disruption does is it changes the way the trade is happening today, the commerce is happening today. And it is more people inclusive. It includes every sector of the value chain in the industry, and it tries to bring some enhancements to the business as usual, or in fact completely turn what used to do, right? So that is the disruption. Now, at some point in time, some of the value chain or some of the specific parts of the industry would have lost its business. And if it happened to be a popular business or more people have happened to be there, then it causes alarm bells. Say, for example, if you happen to work in an industry which prints checks on behalf of banks, that industry is completely out now, right? So if you look at that industry, it is not a good thing for them. But if you look at the, similarly, if you look at any automatic currency counting machines, when the currency circulation is very low, the industry is going to be disturbed, right? So there is no need for counting currencies because it actually doesn't work like that. There is no physical cash, in which case that industry will be out. On the other hand, the cyber security, the internet-based security to protect customers from being hacked or being, anything that's going to happen insecurely on the cyber, that industry has now boomed, because without the cyber security, the fintech in payments is nothing, because if it is insecure, people will not use it. So as a result, the disruption in payments is good for certain specific industry, bad for certain industry. But the ultimate aim is that it has to include the way people do the trade, and it has to benefit. It has to move from good to better, not good to worse. And that is what we consider as a sensible disruption in the right direction for the payments. So now we understand fintech, we understand payments, how this put together is benefiting the society at large. That's what we need to look at, and we will start looking at it. So any questions here about this slide? Right, so I take it as it's clear. So let me move on to the next stage. How does fintech in payments disrupts? Now, I have very specifically taken this particular route of explaining it with a strategic view, right? So what I would like you guys to think is, I want you to imagine yourself as the CEO of a bank, any bank, or maybe a bank that you trade with. You have to think that you are a CEO of the bank, and if this disruption is happening, what you would do, right? So that's the sort of imagination you will be going through. So if you allow me, can I make this session, Kavita? Can I make it a bit interactive?
Absolutely, no problem.
Questions?
We'll be happy.
Sure.
Yes,
So,
Sri, of course, you can make it interactive.
Sure. So I would like to ask one or two questions from the audience here.
Yeah,
A simple question as to, if you were a CEO of a bank, and if you are seeing these sort of disruptions in payments in the industry, what would you do? What are the
technologies,
3 things that you would do in your 3-year plan, 2-year plan, and the immediate plan for this year, as to what you would do? What would be on the top of your list? Maybe 1 or 2 or 3 items per audience is welcome.
Adopt new technology like AI, robotic process automation.
Sure.
And faster, because before someone comes into, we have to do first.
Sure.
So be the first.
Sure. Fantastic. Thank you, sir. Anybody else?
Like in retail banking, the new technology which is coming, so traditional ways are like the people are not visiting the branches, footfall is decreasing, so banks need to be more, during COVID, online, and only a few private sector bank, new generation, but public sector banks still they need to work on that. So
Sure.
that is another challenge.
Fantastic. It's excellent point, sir. Thank you very much. Anybody else?
Second, I think so in first slide you have shown that fintech, I think fintech with the traditional bank, I think they have to collaborate. E-collaboration of traditional bank with the fintech is the new models which are coming. because CASA, current saving, FD, and these are the traditional banking product, I think, which will continue, but the form will be changed, I think.
Yeah.
The collaboration between traditional banks and fintech, the new model. Because to begin with, we thought fintech is a competitor challenge to the bank.
Yeah.
But now we understand that because we have seen ATAL payment banks, or they're not able to do good because they don't have a domain expertise in the bank. So I think they need to collaborate. So both survival if they have to.
Sure. So you're talking more about the product offerings when they come through as a wide range of product offerings.
Yes. Thank you.
Excellent. Yeah. Thank you. Right. So I'll go for one more view and then we can move into the details. Anybody else?
Innovate, more convenience.
Excellent.
Finally, customer is a king. We'll have to see how to give them more for the lesser.
Sure. Excellent. Innovation and value to the customers.
That's right. Correct word.
Excellent. Right. So, so I will park these responses from these gentlemen here. Anyhow, if you look at, I will come and relate it to these points later. So, I will only take, there is quite a lot of sectors here. It won't be complete in 1 hour if we take all the sectors into consideration. I'm only taking the retail bank into consideration, right? For this today's topic, honestly, you can touch base on many items, but conscious of time, let us stick to retail banking only. And that's why I wanted to imagine ourselves and stand in the shoes of the CEO of a retail bank in India and see what they will face with the fintech industry, fintech disruption, specifically from payments. Just to give you an idea, right? If you take Europe as a benchmark, then you're talking about 128 billion as of 2015. 5-6 years before, I'm talking about nearly 128 billion per year annum. Per year, the revenue was for banks in Europe. That's the number that we are talking about purely. If you look at it, payments only revenue. I'm not talking about investment banking, purely retail banking, within which I'm not talking about home loans. I'm not talking about other ways of making money from the bank, right? No lending. I'm not talking about lending business at all here. I'm purely talking from the revenue that they make by selling payments as a product, right? So say, in the UK, I was talking to you about, my experience or my acquaintance is with the CHAPS, which is a high value payments, bank-to-bank transfers. We're talking about several millions being transferred in one go. And then you have CHAPS, which is a bulk payments. BACS and CHAPS are both bulks. BACS is, medium value transfers. And then the faster payments, right? So these three were there, plus you have a check and credit, which is electronic check-based payments. These sort of different payment schemes are there, plus you have a P2P, like similar to Paytm. They used to have something called Paym, right? So these 5 different channels of payment schemes were there. And the faster payments is free for the retail customers, but all of the others are chargeable, right? So how do they charge and how many volumes of transaction? They only charge a small amount. For you to do a high value payment transfer, they only charge you 15 pounds to 100 pounds, sorry, 25 pounds per transfer, right? And all others are minuscule value. The number of transactions, the more the number of transactions that they do, the more the number of fees they collect. The fees the government collects, the government in the sense that the payment system operator collects, and the margin that the banks have is about, say, even if they charge 10% margin, we are talking in the region of, when you're talking in the region of 128 billion per year, it's 25% of the bank's revenue, right? So banks are not in the business to make money from payments, but it gives them 25% revenue. So payments is very, very strong cash cow for the banks. So it is essential for them to obviously keep it alive and sensibly enough. It is more like in the arteries and veins of the body. You need to keep it fit for it to be able to survive. However, banks are encumbered by legacy infrastructures. Say, for example, I'm going to talk a bit slightly technology now, so bear with me. From an infrastructure point of view, we are talking about hardware, we are talking about data centers and things like that, right? So what we are talking about is, if you have, say, IBM, very old, systems. IBM has been here for several decades, and during this period, old machines are still sitting there. It has got a good value life, right? So why would you replace a hardware if it has got a considerable amount of life? But given that, you can't make use of it for of these mainframe machines for anything else, but you have to. There is no point in writing them off now. Unless you write them off now, you cannot have the modern state-of-the-art technology which will let you run 24/7 operating, right? Say, for example, if we all know, right? Even after modernizing, there is a window in a day, and there is a window in the night. Banks will go through. During that window, they will do all the end of day processing or end of business processing, right? To close all the ledgers and all that. It was unimaginably or unacceptable in today's terms, a situation where they have to close the trading for even 5 minutes, 10 minutes to run the reports and all that, to do all the end of period businesses. It doesn't work like that anymore. Everything is online, everything is on the fly, and everything is now. That's the way things are moving. So if you start a new organization today, if Dr. Ritu and myself decide to go for spinning off a new digital bank in, say, Noida, and we will have 0 branches, and we will have the utmost latest technology, we will go to the market with the best of the products. Our footfall will be 0 online because we are only present online. We are present 24/7. We are present on their palm, in any of their handheld devices and any of the technology platform. And we don't need anything extra. All they need is just their face recognition or the fingerprint, and biometrically we validate who they are, right? So security is improved, availability is improved 24/7, 365 days. 99.99% our systems are going to be available because we opted in for cloud-based technology, not IBM-based technology, which sits in somewhere. By having a cloud-based technology, we are omnipresent. We have very little effects from any terrorism-based threats, because our servers are geographically moving from one country to another all the time. As a result, there is no security issue of the data because the data center is also on the cloud, right? And by operating this way, I'm always available. Everything is sorted out, and my operating cost is 1/10 of operating in branches. I do not have to have that many staff, whether I have 100 accounts from different customers or 1 million across India. My operation cost is going to be the same. It is not exponential to the number of customers I have. All my support are going to be AI based. So we understand what is going wrong with the customer. We understand what the customer did. I don't have to ask them to call me and tell what is the problem, because I would have investigated upfront what is potentially going wrong with the customer. And the AI artificially would have worked out what potentially this guy could have a problem with, and he would have worked out and proactively sent a text message or a notification or push notification to their app saying that if you think your interest rate is too low, we have got a matching feature whereby we match the best top interest rate in other branch, other competitor bank, and we will try to match you. And we will try to retain the customer. So customer churning is also immediately stopped. So it's all down to our imagination as to what are the problem statements for a customer, how a bank can solve, all can be looped in to the AI. Now, these are the things that are happening with other banks. I'm a CEO of a traditional high street bank in Delhi and across India, obviously. And I don't know what is going on because I do not have the data. I don't know what is going on with other other competitor digital banks, but clearly, all of a sudden, nearly 30 to 40% of my customers are gone. What do I do? So this is the status quo of the threat in hand. Now, the digital banks are giving a tough time to these retail banks, and the retail banks need to raise their bar to match what is happening with the fintechs. If they don't do that, it's just a matter of time before they die, right? So we have to be extremely, when I say we are playing a role play here in terms of thinking ourselves as a CEO, what is going on in our mind? We need to, like what Mr. Bala said, they need to adopt new modern technologies. Otherwise, they will not be in the game. They have to adopt AI and things like that. And it's not going to, they will never survive. It's just a matter of time because the digital banking is the norm. I want all my products, also Dr. Naren talked about the product offerings. Everything that you're offering to a customer on the traditional platform, you can do it on the digital platform as well, right? So all of this can be done and will be done and should be done. Otherwise, you are not in the game. So I'm more worried now as to how do I replace my legacy system? How do I can't get rid of it because it is a huge investment, perhaps wrongly made in the last 5 years, which has got an expected life of another 15, 20 years. How do I write it off upfront? Either you write off that investment or you write off your business, which is good, which is bad. You need to weigh those things. I'm not saying what is right. This is the disruption that is there, and the CEOs of these banks which are stuck are having nightmares about. This is what is happening, right? I'm not trying to paint a gloomy picture for the CEOs if anybody is attending here, or probably have better things to do. But you need to be careful about these sort of things happening in the industry. Now, to overcome that, what you can do is there are certain things that the banks can do. How much should the CEOs or the CXOs of these banks should think about what sort of investments that they can make, how much they can make investment wise to defend themselves and survive in the game of banking, retail banking in the world, right? So they need to be thinking about that. They need to find a strategy to how they can, if their core banking, if their infrastructure is in place, and if they have a good customer base who are still yet to move to the digital, they should understand, simply speaking, they should understand their customer base. And if there is a threat that is imminent, they should at least have the data to understand their customers, their products, and their competitors. And obviously, if you want to go quick to the market, there are certain options, right? So you can acquire an upcoming startup, which is a digital bank, and you trade, you try to trade under your name on that particular bank, digital bank, and you start slowly growing that. slowly or rapidly as the market demands. You're there in the game, but in a different name. And that any lost revenue, any lost market share will go to your sister concern, right? And that becomes, effectively you are surviving. That's all we are doing, right? So as a CEO, I'll be thinking of different ways of investing, different strategies of investing, mergers and acquisitions, and anything else that I could do in terms of working with. I can work probably with other traditional banks. I can work with the Reserve Bank of India and see what regulations are there in place. Because if you look at some of the fintech, to some extent, they are not regulated enough, perhaps, right? So they need to have a stiff regulations to ensure that they are safe for the customers, it's safe for the industry. And at the same time, by the time they catch up what traditional banks could do should give them some cutting edge, not an unfair advantage. It's not an attempt to kill innovation, because it is purely from these fintechs, like what Mr. Bala said, that it's purely from the fintech that the innovations comes into picture, right? So if the innovation comes, it is value to the customer, value to the industry, and all good things happening. That is, disruption is on the positive side for the ultimate the ecosystem, the financial ecosystem, or the retail banking ecosystem. So if it is positively benefiting somebody, then it is time for us to constructively regulate that, right? So I'm not saying you work with the central bank, collude with them to kill the fintechs, and thereby there is no disruption. Now, that's not fair. That's not what I'm saying. What I'm saying here is there is some areas, normally fintechs are expected or popular for not following regulations. Say, for example, I'll give you a very unrelated, different normal life example. Car parking, right? So car parking is, say, for example, you need to pay 5 rupees to park in front of the shop, right? But if you, that is fair enough, right? So I will pay 5 rupees. It's for 30 minutes. I'll go and do the shopping, come back and leave there. However, if the shop front is so costly because of the high demand to park in front of the shops, if they charge you 500 rupees, I will think twice about parking there. However, there is a regulation. The regulation says that if you park here, the parking fees is 500 rupees. However, if you do not pay, your fees is 100 rupees. The fine is 100 rupees. It is much cheaper to pay the fine than to comply with the regulation and pay 500 rupees. I hope you understand the analogy, right? To park there, it is 500 rupees per hour. If you don't park, it is an offense and you will be fined up to 100 rupees. Which one you will do? I will go for the offense because I will only have to pay 100 rupees. I will plead guilty later and pay, sorry, I didn't know that. I will pay the fees and I'll pay the fine. So it is much cheaper to park it and violate the regulation than to comply with the regulation. So this is what many credit card companies, now I don't want to name them, many credit card companies, the big giants who are always involved in oligopoly, right? What they do is they simply have more legal experts working in them than subject matter experts. All they do is they do all the fintech in engineering based on how they can bend or work with the law, but not illegally. They will work with the law, they will find the loopholes in the system and they work with that. And they will find new ways of doing things which will bring in regulations later. So what I'm trying to say here is fintechs are normally like that. Not all fintechs are, it's just in order for you to innovate, you have to break some rules. Otherwise, if you always follow the sheepishly the rules, then you are not going to innovate. You are not going to break the rules. Unless you break the rules, you can't innovate, right? So if you always go by the rule book, you go very traditional. So So what I'm saying here is the bank can work with the regulators to shape up the industry in a more strengthy and constructive way, and whereby they get an unfair disadvantage working with the fintechs which are not complying with the regulations or is in the gray area. They can work with the central bank to regulate things. Like, say, for example, there were quite a lot of Bitcoin-based trade, although government did not allow, right? And not in this country, but in many countries. Now, trading with the Bitcoin is very, very speculative. The value of the currency is very volatile, or at least somebody have lost money in it. And this will cause some problems to the economy, obviously, right? The shift is moving the value is moving from country to certain, people who are farming these sort of cryptocurrencies, and where it will go. So it will probably go for illegal ways of doing things because it is not a fiat currency. So that is the inherent risk in blockchain in its current form, right? So there needs to be some regulation happening, but once you start regulating, then it loses its charm. So those sort of, it needs to be balanced out, and that's why countries around the world are now coming up with their own digital currencies, which is a cryptocurrency, which is a fiat currency, and it is also trying to solve the problem of having to face the stiff challenges that is coming to these governments from these cryptocurrencies like Bitcoin and so on and so forth, Ethereum, whatever. These are the core challenges that a bank CEO or a bank as an organization will face. Now, on one side, these three things are there. The other one is when you do that, there are a lot of benefits it comes with it, and the most monetizing benefit, right? The more money you can make is from understanding the customers based on the payments data. I know as a CEO that this person, Mr. Shanmugam, his spending pattern is, I understand his spending pattern, from the 1st of 5th every month, he pays all his bills, and from 6th to 8th, he does this thing. So we understand, probably at the tail end of the month, he's running short to make his ends meet. So what do we do? Running out of money to make one more payment for the rest for that month, and probably he is likely to go into overdraft. So we understand the customer behavior. We don't need to know the individual. So using AI and understanding the data that is sitting within my own periphery, I can say that this person is in need of money at the end of the month. And at the end of the month, I can nicely offer him 5 days, 10 days. So I can offer him a similar product, which is helping him and helping me. He's in need of money. I have surplus money. I will lend in the money. So I can probably give him an overdraft. Depending upon it, it can be a complimentary overdraft, it can be a chargeable overdraft, or he may be a premium customer, right? But he being with products. So we can think whether we think or we loop in our intelligence into the AI, and the AI starts producing products on the fly, which State Bank of India has got a big catalog in. Say, you turn the pages, you say for this particular interest rate, right? No, nothing of that sort. Create a product on the fly, and you authorize, as long as the revenue stream is this much. Rated on the fly can be monetized, used for monetizing, and it's a new stream of revenue. So banks should read their KYC, their customer behavior, what is actually happening, innovative products, which is not traditional, and those offerings will help. And I think to that end, Dr. Naren was also talking about, right? So coming up with bring alongside the traditional products that they normally have, so they can make money out of it. Obviously, what is bank here for? They are here to make money for themselves, and as a result, this will work. So there are goods and bads in the payments, right? We have to, me as a CEO of the bank, I need to strategize. In 5 years' time, I should not go on through a bumpy road. If I know that if I don't take action, I will hit the wall. So we need to strategize and move on. So these are the things that should be going on in a bank CEO's mind, right? So I think I talked a lot. Any questions this far?
I just want to add something. In Day5 yesterday's class, someone was saying the same way.
Sure.
The bank, how innovative is that you say someone is coming for a home loan. See, he also wants an interior. So it's filling an interior also, so that the bank can expand in such a way more often.
So this is what they call upselling. So any related products they can do, but banks actually, while they can do all sort of upsellings and side sellings and all that, banks are not in the business of actually. Banks are in the business of buying and selling money, right?
That's right.
So
that's right.
Although the disruption is affecting the core of the survival itself.
Okay, what I said was find an interior so that fund for the interior also you can.
Value add services, the interior can also be their customer or pleasing somebody, and you are probably going to get more loyalty from them as well. So they here. And we are assured that this guy is getting more business, and as a result, any banking product that this interior company is getting, we are closely watching him because his data, his payments data, is in bank survival. Right. So if there is no other questions. Because sometimes silence is a bit dangerous, probably have been not so attractively speaking. So we'll move on to the next, right? So let us look at some of the fintech brands that we see globally, right? So the Paytm obviously is one of the very good innovative proposition that hit the market in the recent and has done very well in India, which is also governed by the NPCI, and on that, similarly, M-Pesa in the African countries, they were the first of its kind to take the market to the underprivileged and people who do not have access to banking. They made use of just the feature phones, not even smartphones, to make use of those to reach them to get access to finance without having to have a bank account. Right? Again, this is a very informed forum. I'm just making you guys recollect how these fintechs have found their their own stamp in a lot of what you call fintech companies like wallet companies are coming up, crowdfunding is coming up, There are quite a lot of banks in the UK. I can talk about Revolut, Monzo, and all that. Fintech facilitators, I don't want to name them, that would be unfair. They come with bank out of the box. So what you do is you buy a product from that technology company, and all you need to do is to work with Bank of England, as there is a bank equivalent of in India, in the UK, and it's so simple that you have bought a product from this fintech, right? And then all you need to do is to set up the supporting environment, speak to Bank of England for a digital, right? So it's as simple as that from a process point of view, but obviously the regulations or ring fencing needs and all that is there. But all these things, the point is the whole of the banking ecosystem can be set up technology-wise in no time. That's the point I'm coming to. So, starting a bank at the speed of lightning is easy. It's only the regulations around it and compliance and those things. Otherwise, operationally, you can go live in no time when you can even buy off the shelf products. They call it bank out of box. So similar to buying a TV, take the TV out of the box and fit it in, plug and play. Similarly, if you have all of the regulations in place and with the banking license from Bank of England, you can start. So this is the way it is. So do you think you can start or makeshift a traditional bank like that? It takes ages, right? You need to hire so many people, you need to do so many areas, and let them operate the bank with the regulations around and the governance that you would normally put into doing this. So that's all these things in contributes of the distributive commonly startups, and they are fast moving companies, right? They are very dynamic, they don't have any overhead, and they focus on producing the value so quickly, right? So to implement a new product, if you were to launch a new savings product in a traditional bank in our country, let us say, right? How long do you think it will happen? You need to work with the print material, you need to do advertising campaign, you need to do so on and so forth. Now, the platforms have changed. There are quite a lot of comparing the market sort of platforms, whereby you can go to them and give them the details. Not when you say go to them, not knock the door, right? They have open APIs whereby you can supply all your market data to them, and they can make available on those platforms. Think about it. You go to buy a market website, and you see which bank gives me the best of the top interest rates, and there is less early redemption charges, all that you check, and the one which works best for you, either in terms of high interest rates or high liquidity or a balance of both, less penalties, you'll go for that. Now, if you make your product data available using your AI, and if you want to launch one from this afternoon onwards, you can share the data with that Compare the Markets website, and that itself is good enough. Next moment onwards, it's going there. You can digitally advertise wherever on whichever platform, and you can specifically surgically target your customers who's high net worth or who has got more spare cash. You see that Mr. Viswanathan is having a bank balance every month increasing 2,000 because having all his account money in the normal account. So probably he is having it because A, he is probably not thinking about long-term savings, or B, he is worried about liquidity He wants probably this money for some. So you can target because he's the person who does not have money or not, at least realistically. He may be interested, but they don't have the money. But somebody who has got the money and also surgically ask them, right? Rather than doing a wide campaign in Sun TV for who has got the money, who is going to lend you, which is you are giving him say somebody who is in need of home loan. Right? So this is the way things work, right? In all these things, this dynamism of data processing, thinking of a legacy system that they have in use of the residual life of that asset that they have in place. So they always focus, these disruptive fintechs always focus on innovative technology and the new processes that hits the market so quickly. So they don't have to plan in a long way for the go-to-market strategy, all of that. They are always on the market, they're always live, and they are 24/7. This is the cutting advantage of democracy. Right? So any questions here before we can move on to the next? Okay. So what are the, I'll just touch base on few business cases that we had from the past, right? So I think we touched on this particular item in the past with the previous session as well.
Oh, it's fine.
Fine. Okay. Right. So for survival, right? So some of the business cases that they bring in could be something like, vehicle recognition, vehicle number plate recognition, that being used in petrol stations. As the car pulls into a petrol station, we recognize their number plate, and based on contactless payment identifier, and probably this guy will have to be authenticated, because if it is a stolen car, it's not just the car is stolen, but he's also filling his tank, or a multi-factor authentication to ensure that the person driving the car is authorized to fill the car based on the profile that is being set up. And to make this a reality, you need a moving on from a banking, retail banking use case, which we saw earlier, which is a beast, to other minor use cases that can bring in more flavors into the fintech that is operational today, right? So identifier for your bank account details will all hang together to that end, ensure that customers have got a smooth, probably, I don't know the exact name in India now, you buy a pass, and that pass is your proxy identifier for you to not having to stop. I think it's a fast pass or something, somebody can tell me what it is called in India, but that pass is enough, and it is automatically recognized by the camera at the toll bridges.
Yes, Srikanth, actually it's a fast track pass time.
Exactly. Thank you, Kavita. Right. So you don't have to queue or go online to buy this. Either you pay upfront, or you can use your profile So your vehicle recognition itself is the proxy for the payment, and it is actually to your bank account details, right? So it can be automatically requested for pay. The request to pay apps, right? So you can request for a payment and say, for example, Dr. Kavita can request somebody to pay her something for a specific business, or probably we all went for a dinner and we want to share our bill. So Kavita would have paid the bill, but she would have requested all of us to do request for Saudi payments in Saudi, or the Pay UK in the UK, or Supply in the Europe. They all are coming up with different schemes for P2P, B2B, different sectors of request to pay, and let them present the bill, pay the bill, factor the bill. Things can be made a reality using request to pay applications. So all these are facilitated heavily by the fintech companies, right? So these are the sort of things that we can think about in using fintechs, and how these fintechs bring value. What value do they bring, and how do they actually benefit the society? Is they are involved in cost optimization. That's by far the best value that I personally see, right? So when the cost is optimized, obviously the margins are low. As a result, the customer benefits. So they tend to share more value products to the customers, and the customer experience also improves. They don't have to queue up in the bank, taking a token, waiting for your turn, for the teller to call you, the manager to call you. Manager calls you, or they notify you, and the problem is either not there or it's nipped in the bud, right? And it also makes it too far-reaching. Because there is no footfall required, there is no branch required. Bank comes to you rather than you having to go. So the financial inclusion is taken. I don't have to. The farmer has his banking in his palm. He don't have to walk into the branch. And by large, it improves the GDP, because the more the money that churns within the economy, the more the GDP. Normally, the money is churning, but it is not recognized because it's cash. It is not traceable, right? And it is every movement of the money is specifically identified, and the economic development is made, right? Money, if it flows, it improves the GDP. If it is stagnant, government is coming up with all this quantitative easing and all that is purely to ensure that even in a downtrodden situation, we would want the people to make the spending all the time. The more the money is spent, the more the money is spent is recognized. That's a key point, because economy and the development is all about sharing the data. What gets measured properly gets managed properly, right? So if you don't measure the data, for you to measure the right data, you need to have the data, and to have you need fintechs. You don't, traditional banking do not lend itself to share the data. But by having this sort of things in place where fintech brings in, everything is readily available from a data point of view. And as a result, is more precise in many cases because you have the car, right? So what the point here is, once you have a vehicle in place, you tend to use it and sometimes overuse it, and it brings more dynamism in your life. Similarly, once you start spending, and once you have the vehicle to spend, which is all these online anytime platform, money keeps churning all the time in the system, and it is recorded, and the economy develops. This is the point, right? So economic development is also measured, managed properly with the advent of fintech and the data electronically available. So that comes to the last of my slide, I believe. So if you have any further questions, I'm all ears.
Yes, participants, now the
Good morning, sir. Good morning, ma'am.
Good morning, ma'am.
Good morning.
Yes, Ritu, ma'am. Yes.
What is measured can be managed. Really, it is awesome quote. What given? I was audible, clear?
Yes, ma'am. Perfect. Yes, we can hear.
Yes. So, yes. So, what you say? What can be measured can be managed. It's really a very nice quote, which really I really appreciate. I found out, sir, we are moving towards fintech, right? And it is what depends about the frequency, right? Terminals, servers, and all the data are stored in our binary terms or digital terms, right? One day, if crash, to have a backup. If I take one example, what you have already said, the SBI is there. N number of times the SBI server is in maintenance. Whenever I need a money, BHIM is not. Everyone in the India is saying we should have a cashless economy, right? When they don't have a card or machines, they don't have ATM, they don't have the. I used to carry my all the things, but those people were not there. So my thing is there should be a backup. We cannot go everything on free. They got digital. So what is your view on this?
Sure. So all these are honestly managed, are honestly these relations from the government and the regulatory authorities. This problem can be solved. Not being available, either it crashes or it's always on the maintenance mode, is purely down to the first slide I have mentioned. It's about the legacy infrastructure that they have in place, and it is not lending itself for the modern 24/7 requirement. Now, banks should do that. And this is why we were talking about cloud, right? So cloud is a facility, or it's in a public infrastructure whereby the data is not held in one server or one terminal. It is held in one place at one time. It is immediately copied, mirrored, and moved to another country. Not just about the physical system crashes, but also the geographic threats. Like say, for example, one of the servers was in Afghanistan. Think about it, data from one country to the other, and it is not another server in another country, and it keeps copying itself all the time. So by having it and keep it always available, and data loss is not a thing, right? So one particular town may go on fire, right? So every data is lost. So it shouldn't be like that. It is backed up, and moved physically from one place to another all the time. So you keep moving your asset and not be fitted in one place for any inherent problems. So this is not something that some banks are not following yet, but it comes with a cost, right? So there is a residual value of that investment that that particular bank you mentioned has invested, and they don't see a value of it. They don't put customer experience in front against the cost. So their cost is more important to them than game will change, right? If they don't wake up, there is a saying that in all these trade that I have seen in my young life when I was in India, right? It says that
you change,
or you'll be
change.
changed. That's what the trade union will be taught to. Correct, exactly. So the way I'll quote you in Tamil. I know probably Dr. Ritu do not know Tamil, but in Tamil they say the trade unions, they call CPI and all that people, they say, this is what the message that they give to the management. It says they are threatening, the trade union is threatening the management, saying either you correct yourself or we will correct you. That's the indirect message that they give. And the same thing is true with the fintechs, right? The fintechs are threatening the banks to raise their share in the market. So this bank may be very big. It is still, in the luxury of his historic strength that will in no time be depleted, completely gone away. So the problems you face as a customer experience thing will make the bank think. And I'm not sure whether the CEO of that particular bank is watching this, but he has to. If not, he will be nowhere in the market very soon. So obviously the changes are coming, the regulatory pressures are there, the market pressures are there, they are changing, but we need to sympathize their situation as well. Having invested 200,000 crores in particular infrastructure, expecting another 5-10 years life to be there, and if it happens to be a public enterprise like the bank named, they will have to think twice before they spend other people's money. It's not money. If it's a private bank, then they can make a conscious decision. But if it's a government in trouble to many people, they would rather let the bank slowly die rather than taking the decision themselves and get themselves into a controversy. Right? So we need to understand the practicalities of it. However, things will change. The regulation from the regulators will change it. If there is a regulatory pressure, then cost doesn't come into picture. It's a regulation, you need to comply. Right? So this is where there is a balance that is happening, but it will even out over a period of time. The other point you were talking about is the banks not being able to honor the customers, having these sort of new spin-offs will help. And I'm sure SBI is also coming up with its own fintech, or at least it is in the concept phase they are talking, right? So while this platform of traditional banking is still there, they will evolve in a nice way. Every bank will and have to in the fintech space, as they will think like a startup and they break all the rules, they bring up something new, and slowly they will migrate all their customers base into that. Then they have to do that.
One more question, sir. As you say that all the things are in the cloud, right? And the server, all the things what we have dumped in a server, the data is moving from one place to another place. There is a threat of hacking in that.
Of course, yes. Similar to, whichever way we live in this world, there is a good guy and there's a bad guy, right? In any trade, for that matter, it happens. So what used to be a problem with your phone, they hack into your phone. The job of police on the street to prevent financial petty crimes or burglaries is reducing. The job of cyber police is increasing. So the shift theft is always increasing. It's on the go. Similarly, being monitored, like, who can have access to data which is the office. So the person who has got access to the data center, either him or somebody who has hacked into the system who is external. Either it has to be an internal person or an external person. If it is an internal person, you will have to have vetting, you have to ensure that your staff is honest enough. All that governance comes into picture, authorization, blah, blah, blah. All that governance process will come into picture. When it comes to external, you need to ensure that the system is secure, your network is secure. You have things like private keys, public keys. I don't want to go into the boring classes about processes in place. That the cybersecurity is continuously evolving and improving to face any threats. Sometimes the hacker wins, sometimes the security process on that. Banks will have to come up with securing their data. That's why in many situations, that we are talking about physically that is persisted in database servers has got to be physically in place, physically residing in India. Maybe a cheaper cloud, but they can't hire that because there is a regulation saying that the cloud server, the database has got to, the data center has to so these are the sort of measures that you get from regulations, you get from cybersecurity, you get from all sort of governance are in place to prevent it. Is it robust enough? Time will tell. But we need to continuously improve on it to meet the needs.
Sir, I have a follow-on question. From SRMIST, sir. Regarding the cloud security and other things, we got now some great products like Amazon Web Services, Google Cloud, and also products, banking specific products like Temenos, Giato, which are coming in place. Is it these are the trends going forward, right? Is it like good enough for them, or there are still scope?
Sure. Obviously, there are scope for improvements. Obviously, they all you get a guarantee from AWS, from and other vendors, right? That they are doing all the hard work to ensure that the premium protects you from all these threats. But also they give you a 99.99% availability, data loss recovery and all that. Albeit, there may be still other ways that the hacker may find a way into even AWS. We don't know. They may be brilliant enough. So in that situation, how do you hedge yourself against it? Is something you have to continuously watch out, right? Although you can hand it over to AWS and say Amazon will take care of everything of money in terms of security, you still have to do your due diligence to ensure that it is safe.
Okay, sir, got it.
So,
yeah.
Just hiring a security in front of your office is not good enough.
Sir, I had another question which I also put it in the chat window. Can I go ahead?
Carry on.
Yeah.
I'm so sorry, I'm not watching the chat window. If anybody, maybe Kavita or anybody else can
Sure, I'll do
read
it.
me out.
I'll do it.
Can also,
Yeah, I'll go ahead, ma'am. Regarding payments bank, you were covering about the Paytm, and we have other banks. We have one bank coming from Payment Service Bank, which is actually to penetrate, even though it has a lot of scope for financial inclusion because it has branches all over India, and you have a mobile app and other things. What is stopping them, or why it is not able to become the #1 payment platform, payment bank in India, sir? What are the issues you feel are stopping them?
Honestly, I personally do not know about that particular product. Or probably I should, but to me, I will go by what little I know about the Indian systems, right? So to have a far-reaching benefits, it needs to be trumpeted. Probably it is not being the PR for it, right? It's not probably good enough. Probably. That is one thing. Second thing is similar to petrol station. The Dr. Ritu was talking about her experience with petrol station not being able to pay on time, or purely moving towards cashless economy. There are some vested interests. I'm not a what do you call a controversial person, right? So I do not have any conspiracies around it. But my general feeling is that there is always a hidden agenda from certain people in India, or any country for that matter, where they want to circumvent the regulations and protect their interests, right? Say, for example, having everything in cash allows them not to pay enough tax, right? Because it is not traceable. As a result, they tend to avoid, although the facility is there, the cash, the point of sale terminal is there, for them to accept a Paytm and QR code based payments and whatnot. They probably do not tend to do that because purely they have potentially have a vested interest in not declaring their revenues, as a result not paying their tax, or whatever the reason may be. It may be money laundering, it may be whatever. So there may be a hidden agenda there, right? And facilities are actually benefiting people. There may be some vested interest, like they call it all these sort of lenders, micro lenders, who make money out of money, right? Those people are closely working with those people who are in need of the money, who are actually benefiting from the lack of financial inclusions in downstream areas in India. They probably are benefiting from it, and they probably are not letting them know about the good benefits of the product that you are talking from Indian Postal Office. So these things could be a reason. I'm not speculating here. There could be many reasons. As long as the PR is good enough, it can be crushed, right?
I agree, sir.
The right people at the right time should be through the right media, right? And the media to reach, probably this guy is already not financially reachable, and maybe use the same tool for the for every job. The tool to reach the people who don't have a reach to finance needs to be reached in.
I agree, sir. The advertisements you see for Paytm or ATAL payment bank, but they don't do much. Thank you, sir.
Vani ma'am.
So the advertisements you see for Paytm,
Dr. Suhasini, raise your hand. Do you have any question to ask?
Yeah, ma'am.
ATAL payment bank.
Sir. I just wanted to ask that we are
Suhasini,
talking about this many security thing and every day, and there are jumped from 72 to 51 or 52 place in the world. So how fintech is combating these things, and what is the strategy we can think of so that we can save from these activities?
So very excellent question. You know, this is something which I face in every country, everywhere I go for implementation. Within a week or 10 days of implementing a new system, you will see that the money laundering is coming to earth very quickly, right? So let me give you an example. In one of the recent implementations that I was closely involved with in bringing up a cashless economy and rolling out new real-time payment system, within 3 weeks' time, we spotted about several hundred. So the reality is that money laundering is always happening, always. It's not new, right? What is new is you get to know that more quickly, immediately, because all the data is now available to you, right? So in the past, the data laundering or not, but now the data is available. Money muling happens, it moves from one place to another, or the fraud is happening. And when it happens and when it goes cross-border, immediately you will get to know, right? So since 2019, it is not new. It has always been happening, but since 2019, because of the advent of Aadhaar, because of tagging the Aadhaar to the bank accounts, and the ability to monitor this with the advent of the new technology in India, with thanks to NPCI, all these data are unearthed and made available, and it is transparent. Now you get to see more data. What you were never able to see in the past, money laundering has been there. Now the route of cash is slowly closing, right? So when the cash avenue is not there, they are so desperate to move the money, and they will find a way to do that, but it is easily unearthed by systems that we put in place, right? So the reality is, Dr. Suhasini, the money laundering, as long as tax is there, money laundering will be there, right? People are desperate to do crimes, and they try to circumvent or navigate the around the system to make it happen. But because the data is available, transparency is there, the national ID or the Aadhaar ID, or any country for that matter, they have the national ID for each of their citizen or their expats. Regulation, as a result, more and more of these will get caught.
Yes, so it is obviously the regulatory body and the system, they are developing their own system to how to caught all those things. But we see that not only the places is going talking about India, but the quantum is also increasing in the world level. It's going to the millions, billions, and trillions. So it is also increasing. So I was just thinking that the newer ways of layering and everything they are doing. So whether it is more serious in the connected world.
It is not, as I told you earlier, right? There is a system. If you take a pie chart, right? There is a system, as there is a segment of a volume in that system. Money is already there in the system. It's not coming from anywhere else. It is, the money is inside the system. It balances it out. There is a segment for the criminals to move money, and that segment will remain like that. It's not going to reduce, it's not going to increase, but it will come to visibility. The more transparent your system is, it comes to light. So both by the volumes and the values, these things have been happening in the past. It will reduce from the cash market and it will go into the more transparent market, and they will come to light. Point number one. Point number two is how to reduce this is by having market and they will come to light. Point number one. Point number two is how to reduce this is by having more regulations to more technology. What is hand in gloves with the fintechs is that they write this software called AML software, anti-money laundering software. What it does is it identifies which bank it is, and is it a sudden spike in the pattern? Is there a footprint for this particular type of transaction from and to accounts? All these can be monitored, and if it is powered by AI and other loop of information, we can work out that this is a potential money laundering transaction. And to flag it and to eyeball that transaction, it is not simple. It is not difficult. These things can be done. Currently, when you were to do it manually, you will only do a post-mortem report on it, and then you will find out that the transaction that went out 30 days earlier is likely to be a money laundering. So can you please do a check? And from that point onwards, they will put a marker on the receiver's account. The next time they receive any money, it will not be credited. That bank has to let know the federal authority, everything is in line. As the money goes from account A to account B, it can be tapped in the middle, and the money will never be honored to the beneficiary. It will be moved into a suspense account, and that suspense account will be watched by the federal authority, whichever country it is, and they will work with it to clearly identify that that's okay, this is a goodie, this is a baddie, and if it's a good, you deliver it. If it's a bad, do you return the money or you watch out and take that the person who is sending the money, will you put him on the watch list and watch it? Those decisions can be made, but at least there are software today in place, quite numbers with anti-money laundering. They come with different levels of effectiveness and cost, and banks are asked to install these anti-money laundering systems in place to ensure that either homegrown or bought out over the shelf, they can have these solutions in place to prevent.
Thank you so much, sir, for this well-explained concept. Thank you.
Sure. Thank you. Okay. Any other questions, ladies and gentlemen?
Srikanth, like being an expert in payments and also operating in the fintech industry, what is the message that you would like to give for the next generation? Like, what will be the kind of career that they can expect down the line for the next couple of decades, and how should they prepare themselves? And also, especially because I heard an expert saying that banks are dying. I don't know whether you will agree with this. And also yesterday, our Union Finance Minister, Nirmala Sitharaman, she has told banks to, the public sector banks, especially to take into account the fintech and, collaborate with them and operate. So what is the kind of advice that you would like to give, and what's your opinion?
To the students, ever so than before, during our times when we were doing our MBA, there was a very fitted, standard job that was in our mind, and we were going to go, right? So we were gearing ourselves to portfolio management, and we were going to become a trader, and we were doing all the sort of Hilton Gruber and all sort of specific studies towards investment analysis, and we went towards that. Now, all those quant jobs, right, all the quantitative analyst jobs are now gone to machines, right? All the quantitative analysis that I would have done when I started my first job is not my job anymore. Today, you have quite a lot of data feeds from Bloomberg, from Reuters, and from this and that, and all sort of data is now made available in instant time. And as a result, what happens? Need potentially for that many quants, maybe, right? They will need some experienced quants, and everything is available from the data, from the computer. It's all instantaneously available. Sometimes the computers take the decision about the investments. So purely talking from an MBA finance point of view, traditionally we would have thought that we will do this, right? And we will study methodic capital asset pricing model, methodic investment analysis. Now those things are pretty bookish, right? And it doesn't work. But you still have to learn the heck. You can't give up. And you have to learn all these things, and you need to fight against the AI, right? Either you tame the tiger or you become a feast for the tiger. Now, AI is the tiger I'm talking about. So you need to be very careful about not just to be a subject matter expert. It's not going to help you. Being a subject matter expert alone is not going to help you. You need to work with the trend. The trend is being AI and things like that. I hope autonomous universities like SRM and other bodies in India can take this into consideration, that blend the courses and the syllabus in such a way that the upcoming generations are fit for the job that they are actually going to do. They will read something and not follow that in their real life help, right? So the education should bring value into that, and pretty much in all other countries as well, they are thinking about this. So in whatever subject matter expertise you want to pursue, whether it is MBA finance or marketing or whatever, everything has got now the flavor of data-driven X, right? The X being your subject matter. So the data drive has to be taken into consideration. Now, the AI should be the tool, and it should not be the one which drives you. You should be driving AI. How do you work with AI? When we were studying, we were told that computer will take over everything. So you need to be computer savvy. That's what we were told, right? When we were young, we were asked to go to NIIT for a small course, familiarize ourselves with IT. Do you know how to operate a computer is the question somebody will ask you when I'm in MBA. Would be for them to familiarize themselves with AI and see where they can fit in. Take AI as a tool and use it for, it's more in a Indian term, Sarvaroga Nivarani, right? Any problem, so that you can have a very surgical treatment to that particular problem in hand. And to that end, you need data. And what data you need to have, how to collect the data, how to make it available, and how to instrumentalize that for your subject matter expertise is what your specialization is going to be going forward. If you are able to tame that tiger, it is under your control. So all you need to do is whatever you study, take care of AI as well, right? AI or data science. Okay, these things is must have going forward. So this is for your first question, Kavita. So that again, this is my opinion. It doesn't have to be correct. You weigh it up based on your personal circumstances and your aspirations to go forward into the market. Because if not in 2 years, definitely in 5 years, most of these things will be driven by automation, not based on human intervention. So, ensure that AI work for you and you don't work for AI. That's the mantra that I would share. In terms of dying banks, it is true. I don't know, somebody copied me or I copied somebody else, or it's probably a general theory in the industry, right? Banks are dying, but we should be able to, the bank should be able to change the trend. And that's why I want to think like a CEO as a theme for this particular session today, right? There is some problem. There is some problem. It's purely because banks traditionally have been thinking too much of themselves, right? They thought they were immune to many changes. They thought that they are the one who is driving the backbone of every industry because money is the common bottom line and money is held with them, that sort of thinking. Now things are changing. The other banks, which are digital banks, are also banks. They're not dying. They are evolving. They are setting new standards in the industry. So as a result, the banks need to evolve. They need to forget their past and rejuvenate themselves. They have to be reborn. So, all the banks now in about 3 years' time will be fully Christianized. I mean to say they will be new born again customers. So, sorry, born again banks. So all the banks will now be evangelized and they will be born again banks in the days to come. If they don't, they will not be there. Right. So that is a true thing in my view, and it's a serious threat. And I work closely with many banks around the world, right? So probably somebody who's watching here from a few banks around the world know what I mean. And I have been talking about this with them for a while now. So in many forums. So banks will evolve, we are seeing today, but in next 2 to 5 years time, you will see a lot of changes in the way it works. I'm sure, who knows better than Dr. Nirmala Sitharaman, she says that and means it's fact. And sorry, I'm not a politician, but I aspire the current financial minister of India. She went to the same financial institution, educational institution as I did. So I went to Kamakoti Vidyalaya. She went to SRC, both from the same institution. So, so another good pride association.
She has said that the public sector banks have to extend assistance to the fintech sector because that's going to be the trend, as
exactly.
you said.
So this probably, as I told you earlier, in the beginning, we started off discussing the fact that they have to work with the Reserve Bank of India to ensure that the fintechs are not breaking the rules and not cause unfair advantage. This is exactly we started off. They are let loose. They will try to kill the fintechs and curb the as a competitor and killing them. Partner with them, work with them, and evolve the ecosystem based on what value that fintech naturally brings into the system. Right. So that is the way I was looking at it, and work with them with the spin off a new brand from your trading name, and you evolve that, and over a period of time, you're not actually losing your market share. You partner with them, you bring them up, and then you shift your market share from the traditional customer, traditional. I'm sure they are savvy. They do understand all. As possible, use your language. I don't have to tell them. It is only for this.
Okay. Sir, Venkat, question 3.
Yeah. Good morning, Dr. Kavita and Krish.
Yes, you are audible, sir. Please go ahead.
In fact, Krish sir, I'm a professor teaching supply chain management courses at Symbiosis. And I have students who are, 90% of them are from the engineering background, okay, when they come in. And some of them, maybe about 60% of them also have a short work experience of, let's say, 2 to 5 years. Now, what I'm looking for is, when we talk about fintech, it certainly raises a question that is it meant for finance kind of, specialization? But the thing is, I have students from supply chain, marketing, the other domains as well. And when fintech kind of companies, they come for placements or something, the question is then, am I fit for it? I mean, what kind of knowledge and skill set, can be aligned so that these guys can find a, place in this sector?
Sure, sir. So what is very in technology can relate themselves to it, right? So I know we started off talking about the core of the banking, the products within the banking and all that. And we also went on to infrastructure, technology and all that, talking about cloud and all that. So anybody with engineering background can relate themselves to one or many aspects of the supply chain management is also very important, because when it comes to supply chain management, on its side roots, it relates to inventory management, right? Because supply chain is grossly driven by what you have in stock. Then what you have in stock, you can't manage the supply chain if you have nothing in stock. If you don't, so that comes the inventory management. And when it comes to inventory management, and when what you have, nuts and bolts in your shelf to be delivered to so it doesn't work like that, right? The core of finance work based on what is in the inventory, that applies not just for fintech, applies to what is in the kitchen, both the urud dal and this thing in stock. And if the supply chain is affected, pandemic, the lorry driver doesn't deliver it to the local store and the local store does not have in stock, I don't have it today. So everything is intertwined in the ecosystem. And to that end, the supply chain management thinking of, just to let you know, I started off my career in finance. I left finance in about very short time. In about 1 year's time, I left my job as a trader and I joined IT. And for about 10 years, I was in IT. Then I moved on to nearly supply chain management, closer with IT, which is called network business in Toyota. In manufacturing and supply chain, I was very close at Toyota for about 10, 11 years. Then I came back to real-time banking, right? So completely unrelated from all this journey, but the point is, it's not about me, it's about the point that everything has got something in common, right? As much as supply chain management has got a huge influence on the breakfast that I'm going to have this morning. The whole point is, when it comes to inventory management, banks should have enough money in liquidity for it to be able to send the money to other bank, right? If Venkatesh Iyengar is sending money to Kavita Shanmugam, for that matter, your bank, say, for example, your originating bank is State Bank of India. It goes and reaches ICICI bank account of Kavita. Then the money, although money is going from Kavita's account, it has to be physically held by the bank in a liquid form for it to be able to settle with the other recipient bank. So SBI should have enough sufficient cash to do the transfer and settle it with ICICI Bank in order to honor actually the ultimate creditor and the ultimate debtor. Ultimate debtor being Venkatesh, ultimate beneficiary being Kavita. The banks in between should have the physical cash, right? It is for one customer we are talking about. There can be millions and trillions of transactions happening in a day or a period. And for all these, there should be sufficient cash provisioned. Do they have the money all the time? Or do they manage it? This is the supply chain that they need to be thinking about. So supply chain is not purely about thinking on the nuts and bolts or the physical commodities that you are going to deliver. Obviously, we think about it all the time, but it is also about collateral management or inventory management. You call it whatever, right? It has got a specific term in a specific industry, right? and stock held in storage, and then you deliver it at a specific time. That is batch processing. When you don't have a batch processing and everything has to be instantaneous, real time, as in just in time manufacturing, then you need to have the stock just in time for it to be made, and it has to be available 24/7. So you have to plan for it, and all these things come with planning. So no matter which industry you work in, trust me, everything has got something in common. And if you try to understand what is common between the industry that you worked with, or it is today, to what it is, then whether you study engineering, whether you study cost management, whether you study about something optimizing, or you study about supply chain management, you should be smart enough. That is the basic underlying thing, right? These things we learn from attitude soft classes, right? What you learned needs to be learned to be applied to the real life, right? So that is the key thing. Once we get the knack of it, then no matter what subject we are talking about, we can translate what we know to what is relevant to the job in hand. So supply chain management is very key in fintech.
I have one more associated question to it. See, a lot of these emerging technologies are coming up, at a very fast pace, especially AI, ML, and all those IoT and all. So normally, what happens is the existing curriculum or the whatever is the course pack, it doesn't have these technologies as a core study. You might relate in some case studies, or maybe through some experiential learning, or some kind of project experience. So here again, there's a very big gap in terms of what you have in the curriculum, and how do you tailor it for your students. So it is not that overnight you can just keep on changing your curriculum. So how do we actually
exactly
look at
this? This is from Kavita and I were also facing the same problem when we were going through our MBA, right? So we tried a lot to get into IIM, right? Many of us tried, but we were maybe IIM was not lucky enough to have us. So that's the way it ended up.
1995. In 1995.
Yes. So, however, what is the difference between IIM and other institutions? Pretty much, we all read the same books, right? All the institutions in the institutions come with pretty much identical curriculum. So, what makes the difference? Right from the beginning, not now, the dynamism in the market as to what you study in the bookish syllabus to what the market wants in terms of a good candidate is different. And anybody who is coming out of IIM or IIT are more seen as a creamy layer and more applicable is purely because of this particular thing, right? You don't have to dynamically change the syllabus. Academies are there to teach you the core fundamentals of the academics, right? So that is the way the universities and colleges operate. However, the trend keeps changing, and where it comes, what's the key differentiator between the top premium universities and the not so top premium universities is this, that they have these sort of practical programs, the projects, the internships and all that. Let us more applicable, and that's at your freedom, right? You don't have to get any approval from any governing bodies or AICTE or anything. That will be your key differentiator. That will make you get the advantage. My humble opinion is that you try to give them a project which translate the supply chain management related business problem in financial industry. Let them think, break their head, let them come with some solution. Let us guide them to convert, ask them to write a white paper, right? That may be a simplest thing. Write a white paper, take a common business problem in hand, right? And see how this problem can be engineered and solutionized using AI from a supply chain management subject matter expertise point of view. So let us bring the brains together. It's not just benefiting that particular student. It is also benefiting the society, because you come with a fresh mind, and the youngsters always have the energy and the what do you call that, out of the box thinking that will try to solve, because we are all constrained by what we know. And that is the biggest problem. We need somebody who has not gone through the problem that we have gone through, but he approaches the problem with a different eye. And this guy can come with a super completely opposite way of thinking, and that can solve the problem in hand. What I mean to say is that, let me give a simple example here, right? I started off talking about collateral management. Now, many banks around the world are rewriting their collateral management algorithm, right? So I'm also closer to one of the cases here in Middle East, and the collateral management and the ring fencing of their capital are all somehow related, right? So banks expected by the regulators to lock in a certain amount of money in terms of preventing them from going bust. We also what happened in Lehman Brothers X number of years before. We also how many times the American banks run over each other and had caused havoc around the world, right? Even today, the knock-on effect of that is the saving rates are pretty much at the floor level. The interest rate in the UK is 0.1% interbank lending rate, right? Unimaginable. So savers have no space in the world, and everything is purely based on investment markets going forward. And governments cannot continuously, eternally support these banking system with the quantitative easing and all that. So they have to put an end to that. Once they put an end to that, it will have a terrific effect on the GDP and the economy and all that. Things will start going belly up. So this sort of things need to be very carefully managed. The whole problem started off with some irresponsible bankers, right? So had the collateral management been proper at that time, it will be good. So point I'm trying to say here is, if we have a course with the course in the sense not the mainstream, but either through your
so we give through value-added courses. We give some part through value-added course.
Yes. So all these things can be sandwiched, and ask them to write some white papers. When I'm available, I can lend some ideas to them. And what we can do is take the problem in hand, how banks can maintain optimum collateral, optimum ring fencing, and purely it is down to, they cannot lock all the money in just ring fencing. So how do they manage it, right? How do they manage it is purely have something in demand, and you need something to keep the business afloat, which is the supply. How do you manage the demand and supply, and how the supply chain management is sorted? Purely from that point of view, if they come and bring in the industry knowledge that they probably came from engineering or any mechanical engineering or anything for that matter, they can bring that and cross-pollinate the engineering into fintech. And this is exactly how fintech evolves. Finance and technology, some engineers and some finance guys sit together, or they are both the same, and try to bring in.
So when you go for recruitment, how do you see this? There are many of these Coursera, EDX kind of courses, these certifications. While these students, they engage and they get these certifications, but the way the certificates are being, the course is being implemented. I hope you are getting the bottom line. I don't know how much of knowledge really transfers into the head.
So
but how do you look at, you as a recruiter, how do you see, the acceptability of this certification?
Sure. So there is always this problem always exists, right? So the moment this guy proves himself and familiarize himself with this, this takes about a year or two to be a master in this particular area, to blend everything and put it together. But at least this guy is familiar. He has got a stepping stone towards that. So giving him a certificate alone is not going to help, right? After this, he needs to have that fire in him to go and work in that industry to solve the problem for that industry, right? So it works both ways. The industry needs to support him or this particular type of education, and also this the educational institutions needs to do a roadmap for somebody to go down that route, right? So it works both ways. When it meets in the middle, it is good for the society. This is what I say that institutions and IIM and the so-called premier institutes successfully do, and that is why they are claiming themselves to be premium, because their produce, their outputs, their candidates are able to prove themselves in the industry with this imbibed knowledge. Yes, so the reception is high, and this is where the sort of institutions in the middle can get themselves up to that level of standards.
Thank you, sir. Thank you.
So curriculum books are always the same. It won't make change. What makes the difference is the can-do attitude that is imbibed by the honest guides like you, and they will get on the track. Just show them the roadmap.
Thank you. I'm done.
Okay, so I now request all the participants. We just have, almost time is up. So we'll have a screenshot along with the Srikanth. So Srikanth, can you please stop sharing?
Sure.
So that we can take a screenshot. Suganti? So all ready? Yeah, okay. So thank you so much. We are done. So thank you, Srikanth. It was wonderful having you back again for this session on fintech in payments. And I think all our participants will agree with me if I say that you were the right person to give us valuable inputs, and also your knowledge on fintech in payments area, especially since you are specialized in that and you are also a consultant for several governments and government banks. So thank you for that wonderful session. And as you said, the next session that is coming up is a session on disruptive supply chain technologies from Professor Arshin or from IIT Madras. So if you want, you can also join us for that. So thank you, Srikanth, once again. For your valuable time. I know only today you are a little bit free because it's Friday and it's a holiday for you. So thank you so much
wish you
for
all
joining
the very
us.
best, and thanks for putting together these sort of forums. We will help